Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate with your host, Kevin Perenio. As an owner and C-level executive for 20 plus years in finance, KP is here to serve you with all of his knowledge and experience. Whether you're a broker, realtor, or just interested in the economy, this is the podcast for you. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Phoenix, Arizona. We're here at the Lenders One Summit at the Desert Ridge Resort. It's a JW Marriott property. It's pretty cool. And before I go into the meat grinder over there, the lobby bar, for those of you that go to conferences and trade shows, you know how crazy it is. I want to get out my Monday update and just try and talk about a couple things real quick here. So back on the road, getting after it. We got the ICE experience next week in Vegas, and then Mortgage Collaborative is in Miami a couple weeks after that. I know there's a lot going on. Our industry is kicking back off again, so it's all good. Ukraine and the Russian invasion is still dominating the headlines. It's caused a lot of uncertainty. We talk about certainty versus uncertainty. Rates go up, rates go down. When there's uncertainty in the world, like, for example, when Russia, that provides 10% of the world's crude oil, is being banned potentially, or their crude oil is not being purchased by certain nations, most nations, as a boycott, that their ruble, their currency is falling, or their economy is potentially collapsing, that uncertainty, it trickles down. We are in a collective society. We know this. We know a couple years back when China goes into recession, it pulled the whole world down in it. It happens. We are an interconnected global economy, and there's not much we can do about it. But in the same form, you can use that connectivity to say, hey, dude, you can't play like this. If you're going to be interconnected with us and be our oil supplier, the second largest supplier in the world, 10% of the world, you can't just go bombing nations and killing people. That ain't cool. So the collective, the socialistic aspect of our society, of human nature, is, for the most part, responding. That is causing oil prices to top over $130 per barrel on oil future costs. It's the highest oil has cost since 2008. That uncertainty about more inflation on top of the over 7% inflation that we've been fighting here, the Fed now has to fight here locally, is causing a tremendous amount of uncertainty, and it's impacting the stock market, money flow, the strength of currencies around the world. And there is a ton of uncertainty about what's going to happen next. So interest rates have gotten a little bit better because when there's a geopolitical event like the one we're having, there's what's called a flight to safety, where a lot of the institutional traders will buy large swaths of safe assets like a bond or a treasury. And that's good for mortgage rates. But is it temporary? Are rates going to go back up? We saw that they did kind of get worse today, unfortunately. So we're watching whether there's this flight to safety trade, whether there's a certainty brought. Will this invasion end? Will there be a ceasefire? Will it end with more violence? Will it not end anytime soon? All these kinds of things are a real problem. And unfortunately, that uncertainty is going to impact our interest rates and our economy. So we'll keep an eye on the data coming out from there. On that note, by the way, we did see a huge 678,000 payroll addition on the job report for February last Friday, including 92,000 upward revision from the prior months, and 62.3% labor participation rate. The participation rate of people getting back into the market, looking for jobs, it went up. And even though more people went out looking for jobs, the unemployment rate still went down to 3.8%. That's very strong. That's extremely strong. If there's any one knock that could come from the jobs report, it's that the wage growth was not good. It wasn't rising at the pace that people expected. So does that mean low-paying jobs are what's being filled with those record numbers? I mean, it's a pretty clear sign that this pandemic is basically over. From a very measured negative standpoint. It doesn't mean we don't have flare-ups. It doesn't mean we can't be safe. It doesn't mean we can't continue to be vigilant, and there won't be deaths. I mean, there will be, unfortunately. It's a virus, but the economies have largely reopened. So when states like New York and Massachusetts and California, when they lift their mask bans, I mean, that's a sign that we are reopened. So anyway, the jobs report was generally very good. We have a lot of uncertainty, obviously, in the stock market with oil prices. We'll see if they'll come down. I saw a very cool stat today from Liz Young. She runs, she's basically chief investment officer for SoFi Lending, and who has a mortgage arm, by the way, a really great company. She reported that the amount that consumers spend on energy right now, even with gas prices, oil prices, heating oil prices, where they're at right now, it's about 3.3%. And she said that until we get over 5% of consumers' budgets being spent on energy, that you don't start to see what's called demand destruction. So we're going to talk about demand destruction here in the coming weeks. I've been talking about it on my last couple of videos. When prices get really high and inflation is bad, people don't have to spend. They can destroy their demand, and they can start to create this economy. And 70% of our economy is based, the GDP is based on consumer demand. If demand destruction starts to occur, you're going to see a potential recession. And oh, by the way, the 10-year, 2-year treasury spread was at 20 basis points. If that goes to a negative spread, that's usually a sign of an impending recession. So is $130, $150 oil, right? So lots of things to look at. Still a lot of good news. Earnings from good companies are out there, but we've got some headwinds. It's never perfect. And then I'll give you this little look here at the event, the venue. You're going to see a bunch of people down here. This is our industry alive and well. Can't really zoom in there, but networking. It's for the cause. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.